The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. I'm Karen Cho with Steve Sedgwick, and these are your headlines. Tariff tit-for-tat. China retaliates within minutes of US trade restrictions going into effect, levelling duties on US imports from coal to crude and dragging Google into the mix. President Trump strikes a more conciliatory tone with Canada and Mexico, steadying the markets after suspending tariffs for 30 days while he seeks concessions.
UBS confirms its guidance after beating expectations and reporting $770 million in fourth quarter net profit. We're going to hear from the CEO, Sergio Motti. We'll do that in exactly 1 hour's time. Plus, BNP Paribas results crossing the wires. All eyes on whether France's largest lender can top its full-year estimates. So we will hear from the CFO, Lars Machinal, at this hour.
It's only 6 a.m. in London, already a busy morning as China has now retaliated, hitting the US with tariffs of its own. From February 10th, Beijing will impose a 15% duty on American coal and LNG and an additional 10% tariff on crude oil, farm equipment and some autos. In a sign of a widening impact, China's anti-monopoly regulator also announced the launch of an investigation into Google. So very quick retaliation. And I think what emerged yesterday was a market that was trying to recalibrate around the potential of tariffs. Tariffs came through very quickly and then some of them were rolled back. So it was a market that was trying to position defensively, pull back on risk, and then obviously going back into some risk assets. So is this a market with a lot of churn that you now want to be involved in as the Chinese also retaliate? A couple of points on what we just heard from the Chinese around very large cars with large engines. And don't forget, this is a playbook that they tried last year with the Europeans, as the Europeans lobbed some tariffs thanks to what they saw as market distortions. This is one area that they've also rolled out now for the Americans. So that was almost a dress rehearsal in some ways for what we're seeing today. In terms of Google, not a huge operation for Google in China, very low market share there thanks to a lot of regulation, firewalls over the years. But to me, it is a symbol of what other nations could do, because the digital services revenue that the likes of Google and other big American technology companies have across the world in a footprint here is quite significant. So this is something from the Chinese perhaps to show what you could use in your weapon of tools if you are confronted with tariffs, and that is the significance for me.
Yeah, good morning, Chican. What a fascinating time to be in the news world. I'll take a step back, if I may, and just looking at the market reactions yesterday, because I think that's very, very important. When we talk about tariff wars historically, they tend to evolve over weeks, months, even years in many cases as well. And it's a steady accumulation and then negotiation and then sometimes an impasse and sometimes actually a rapprochement. But what I think is very interesting is the speed with which you, the viewer, is having to deal with this. Yesterday, for instance, of course, tariffs announced within 24 hours on Mexico, on China, on the Canadians, and in a very, very quick period of time. And that is a brilliant chart to show as well. In a very quick period of time, actually, things got turned around again as well. So something we have to understand with the Trump administration is things can move very, very quickly. I was reading Gideon Rachman in the FT, who wrote a great piece who said the American policy is to shoot first and ask questions later on. And that's very much how it went, isn't it? Tariffs were put on, and then after negotiations with Sheinbaum as well, the tariffs were taken off. And as such, you saw that blip on the left-hand side. So your timescale for making decisions is less elongated, and you have to be a lot swifter. Maybe that means you might own more premium. Secondly, the Chinese debate clearly is going to be the preeminent one of this administration. The relationship trans-Pacific is far more important, perhaps, for global trade than relations with Canada and Mexico and the United States. Something we haven't mentioned yet on this show is also that the Chinese Commerce Ministry has also imposed export controls on tungsten, tellurium, ruthenium, molybdenum. Now, don't ask me what these rare earths do, but I know that they're all very, very important in 21st century electronics and 21st century technology. And if the US is still going to be the preeminent technological player in AI and other areas, and of course in semiconductors, of course that is how the Chinese can hit back. So that is absolutely fascinating. Karen talks about the tools and the weapons available for China. I think that's fascinating that rare earths have been put front and center as well.
What happens from here when it comes to the Chinese relationship? Because don't forget, it is the Lunar New Year holiday. This is a traditional quiet period for the Chinese. So there is meant to be a conversation with Chinese President Xi Jinping. Apparently, Trump's press secretary said he will speak to the Chinese president in the next couple of days. So there's still a forthcoming conversation. Is this just the first salvo? But I think what was interesting, a comment that we saw in the market yesterday from JP Morgan's chief US economist, Michael Feroli, who's often at the forefront of commenting on some of the market ructions, said the increase in policy uncertainty will be hard to put back in the bottle. And that's the problem. What type of environment do we now have? Does anybody have FOMO out there in the market anymore after what we've just seen yesterday? Is this the sort of market you dip your toe back into, or do you stay firmly on the sidelines at this point?
Right, let's give you some more details as well. US President Donald Trump has delayed implementing tariffs on Mexico and Canada for 30 days. In return, America's neighbours will bolster border enforcement to clamp down on immigration and drug smuggling. Following talks with Canada's Justin Trudeau and Mexico's Claudia Sheinbaum, Trump said he would seek to negotiate a new trade agreement over the next month. New trade agreement, incidentally, on top of the one that he negotiated with the Canadians and the Mexicans. That's a small detail that not many people have mentioned at the moment. The current deal is the one that he negotiated first time round. Anyway, this is to avoid pushing ahead with the threatened 25% tariffs on the two countries. Following Trump's initial threat of sweeping tariffs over the weekend, US policymakers and investors told CNBC about the risks of such a move.
What we're seeing this morning does really highlight that there's a lot of uncertainty about how policies unfold. And without knowing what actual policy will be implemented, it's just really not possible to be too precise about what the likely impacts are going to be.
Trump 2.0, I think Trump being Trump, I don't know if it will play as well as it did in 1.0 because there's no room for mistakes. And look, he's my president now. I pray he makes all the right decisions because we are precariously perched from a macro standpoint. I don't think we've ever had as many things that are connected and circular and could go wrong.
Well, let's just take a look at the wash-up of the market action yesterday. We saw smaller ranges on the Dow. It was down by about 1/3%. The stocks on the move is what's fascinating. Caterpillar, very big stock, seen as a real international play, cyclical name, that was down. So again, what sort of reading is this now saying about the macro and the positioning there that that was the underperformer on the Dow is fascinating. Second negative session in a row is what we saw for the Dow. For the S&P 500, also in reverse, slightly stepped up selling there, but it was technology that was right in the crosshairs yesterday. That was the underperforming sector, and as a result, the Nasdaq was down 1.2%. For me, it was Apple, and this is fascinating because the market now concerned about the higher costs that Apple could incur because of its operations in China, thanks to the tariffs. Now, don't forget, this was a stock just a couple of days earlier that everybody was rotating into because of the DeepSeek story, that it hadn't been as invested in AI, and investors saw this as a great way to play what could be cheaper AI costs. So Apple right at the bottom of the S&P and the Nasdaq yesterday. Look at the US intraday recovery. This is the roller coaster ride that was the US market action yesterday, that we saw the tariffs coming into play and then a pause on the tariffs as the market then snapped back later on. So it certainly was a slightly different trade from morning into the afternoon. Same story too for foreign exchange markets, and we saw the US dollar reaction versus some of the major pairs and crosses. Dollar index is down slightly today. We're off 0.1%. The peso, Canadian dollar, the loonie, one of the ones we're watching this morning, dollar is still stronger versus the loonie, up 0.4% and holding firm too versus the peso, that it's giving back a little bit of territory. Yuan is the one we're watching around the retaliation now from the Chinese. The dollar is slightly firmer versus the currency. There's talk of depreciation here by the Chinese currency that may help compensate for some of the tariffs. To what we're seeing on the WTI Brent gold trade. The commodity trade first up on Brent and oil. You can see it's down this morning, down 1.8 on WTI. And we were hearing firsthand yesterday that slower growth could impact oil in that context if we've got tariffs that's impacting global growth. Brent sliding this morning. Gold has been around records. We saw that Monday. Concerns around this protectionist tilt certainly supporting bullion. And of course, there are issues with the physical delivery with hoarding in New York. So that's impacting bullion. To the Asian markets, we're still ex-China. I mentioned the Chinese Lunar New Year holiday. That market's still out of action. The ones that are trading, you can see it's positive right across the board from stocks out of the Tokyo market across to Hong Kong. That is stronger to the tune of about 2%. Let's get to John Denton, who is Secretary General, International Chamber of Commerce. John, thank you very much for joining us. A lot of moving pieces. The Chinese retaliating this morning. Just first up, weigh in on the type of tariff regime that we've just seen in the past 24 hours.
Well, it's shrouded in fog, isn't it? What we're trying to work out is what is the problem that we're trying to solve here? Is it, from the US administration side, is it fentanyl? Is it illegal immigration? Is it the battle for economic superiority in the 21st century? If it's the first two, then it seems like tariffs are not the best way about that. What we're really seeing here is that we've shifted from rule-based approach, so we're not using any of the systems that can deal with disputes, and it's power-based interest plays here, which means it comes down really to leverage, and you can see the leverage plays coming out of Canada and Mexico. You've now seen the Chinese assert a position which will give them, or they hope to get some leverage, because ultimately what they want is a negotiation with the principals. So it's very confusing for business. In fact, you probably couldn't count the number of war rooms that have been established in businesses who oversee major global supply chains. But it's completely confounding for small businesses who are really the driving lifeblood of the global economy. So confusion, fog. The need to understand the framing of this now is all about power-based negotiations, and the importance for leaders to understand that, but also not to cut their noses off to spite their faces here. You could see that if Canada had gone through with the retaliation, their own Reserve Bank had actually talked about the country tipping into recession. Same thing with Mexico. So that's why negotiations become key in this situation.
And John, in this context, the market was trying to work out what to do with the news flow yesterday. They had the reality that, look, this may not just be a negotiation. We could have tariffs in force for some time. And then quickly they're trying to move as there was a pause on some of those Mexican tariffs. So what do investors do with the news flow here? Do you think we are talking about the worst case scenario of a president that is going to be using tariffs with force and keeping them there for some time?
Well, a couple of things. First of all, President Trump is the President of the United States of America. He holds an extremely important office, so we need to take seriously what he says and what the statements are coming from the U.S. administration, and frankly, price that in. The reality is the worst-case scenario may be a realistic possibility. It's not so much, by the way, the tariffs that are the killer here. Because at the end of the day, the U.S. engagement with the global economy in 2025 is very different to what it was in 2016 or even 2020. I mean, it accounts now for just on 13% of global trade flows. So on its own, it can't lead to a global trade war. What is important here, that what will actually emerge if there are a series of retaliatory moves by other nations, that could actually tip us into a complicated situation. The other issue, which is not being focused on here, I think, at the moment, is the combination of the challenges on tax, which have been announced as well. At the moment, we're focused on the tariff side. Clearly, there's irritation, but also views formed in the U.S. administration about the operation of digital taxes and suggestions about responses to that. So the combination of all those things create a realistic pathway through to some quite serious issues for the global economy. So that needs to be considered. But at the same time, this is a fast-moving show, as you've seen. What is seen to be definitive statements end up being ambiguous statements. So really keeping an eye on this, as everyone is doing, and trying to keep up with it. But I think really understanding this framing is really around power and how that's exercised, and actually calling on leaders here to actually preempt where they can. You've seen what's just happened in Panama as well. I don't know if you've caught up with that, where you're seeing a shift in their policy there, preempting. So these sort of things all need to be considered right now.
John, in terms of what this does to companies and their decision-making next, and countries in their decision-making, you said irritating. I've also seen tiresome as a modus operandi from the administration of the way of doing business. Well, there is a school of thought that actually it's going to drive people who wouldn't normally strive for trade deals towards each other, i.e. the EU and the Chinese, which almost had quite a big trade deal a couple of years ago as well. So do you think actually, rather than actually expanding business with and in the United States, this is going to drive others around the world away from the United States and have a detrimental effect?
A great observation. That's what's happening right now. This is not new. As I said, the actual engagement of the US economy in global trade is actually at 13%. It was much, much higher. I mean, what happened in 1930s when the US could drive the world into a global trade war is actually just not possible now. And what you're already seeing is diversion. You've seen an increase in South-South trade. You've seen the emergence of the BRICS Plus group, which is focused on trade within that group. You've seen the strengthening of relationships through the African Continental Free Trade Area. You're seeing a lot of companies and countries divert their trade right now. You see, and you will definitely see, an increase of engagement by China. You're already seeing it now in developing and emerging economies. And do not underestimate the amount of cross-regional and South-South regional trade that is already existing.
Yeah, that's absolutely fascinating. John, having studied multilateralism and bilateralism many, many years ago as well, it is the basic thesis that big countries like bilateral because they can impose themselves on their trading partners, others like multilateral. This is an enormous challenge to the multilateral trading system, whether it's the OECD, the WTO, the rules-based system that was created, Bretton Woods post-Second World War as well. Are we going to see a massive, massive shift in how trade relations are carried out on a global basis?
Yeah, you're already seeing it. But it's also important to understand that institutions like the WTO do a lot more than just deal with issues like tariffs. There's a lot of mutual interest, including interest by the US in maintaining aspects of multilateralism. The issue is, does the whole system collapse? I don't think so, because there's so much self-interest involved for nations in terms of cross-border trade and the need to keep it going. But the way in which the institutions will function needs to be reviewed. And we've said that for some time. I mean, the problem you've got with an institution like the WTO is not the leadership. I think Ngozi is doing a wonderful job. It's the fact that the parties themselves, the members, have not been able to reach agreement actually how to reform that institution to make it relevant in the 21st century. Frankly, what we're seeing now should propel some of the most important players who were not the most important players 40 years ago, particularly developing and emerging economies, to stand up. And because they're the biggest losers, by the way, from a collapse of the multilateral trading system, and for them to actually proffer ideas and policies and frameworks for reform of the system. And that's something we're working on right now. The system is actually also undercooked and misunderstood. It is also one of the greatest systems for driving economic development. And that's why countries like Somalia want to be part of the WTO, because immediately it gives a propulsion to their economic growth. So it's in the interest of the global South, frankly, to do something about reforming the WTO and not just sit there and throw arrows or shoot arrows at developed countries. So this is something we're working on right now.
Great conversation, John. Thank you very much indeed for your insight. Much appreciated. And hopefully we'll see you around the set soon. John Denton, Secretary General of the International Chamber of Commerce. Let me just tell you what else is... well, we've got a lot of coverage online. For more on the tariff tit-for-tat. You've got to be careful how you say that. Tariff tit-for-tat. And China's retaliatory actions. Head over to CNBC.com. Karen.
Ahead on the show, BNP Paribas posts double-digit fourth quarter revenue growth as it posts a beat on the top and bottom line. We'll break down the earnings and hear from the CFO, Lars Machenal, next. Plus, plenty more numbers on deck today. We're going to hear from the likes of OMV and Infineon later this hour. And don't miss our interview with the CEO of UBS, Sergio Motti, after a fourth quarter beat that is coming up at 7 GMT.
Right, amidst the furore of trade battles, we've got to concentrate on our bread and butter, which is a lot of the corporate earnings as well. And let's concentrate on two European banks, one doing rather well, the other one limping along, really. The former, UBS. UBS is pretty much one of the few universal banking groups left in Europe as well. The shares are up 14.6% year to date. They trade on a whopping great premium to the rest of the sector, mostly here in Europe. There you can see 1 year performance 23% higher. They have posted a net income of $770 million for the fourth quarter. As Reuters puts it, I can't put it any better. They have trounced forecasts. They have a share buyback program as well of up to $3 billion this year, higher than the $2.2 billion analysts had expected. Tick. They plan to repurchase 1 billion shares in the first half and 2 billion in the second half. What else have they said? Total revenues up to $11.6 billion. That is up 7%. That is mildly higher than the expectations by a decimal. But net new assets attracting global wealth management during the quarter amounted to $18 billion. That did miss estimates of $21 billion. So there's just a little bit of a fly in the ointment as well. Of course, UBS waiting to know what the Swiss want to do about banking regulations. This is the same Swiss authorities and regulators who completely missed the credit Swiss debacle and are now really concerned about the well-run bank that is UBS. But there you go. Anyway, they want UBS to hold more capital and repent. Maybe they want them to repent. Avoid a repeat and repent of the Credit Suisse meltdown. I'm sure they'd like Sergio Motti to repent, but it's just not in his DNA. Anyway,
that's so much more interesting, didn't you?
Oh, absolutely. I like the word repent. I should repent at some stage. Sergio Motti will be on this channel in 37 minutes' time. Meanwhile, you get the damp squib, Karen.
It's because my French is so good. I get to do the BNP Paribas numbers.
No, you're BNP Paribas.
Oh, yes. So we have a takeaway message here, and that is first up around the ROTE target. That has been cut to 11.5% this year. The range was from 11.5% to 12%. So it's the lower end of that range now in terms of those returns. The share buyback program, 1.08 billion euros. That is, it's confirmed at 60% payout ratio to 2026. Also introduces a semi-annual interim dividend starting this year, so starting in 2025. So the payout's quite key here, even as that profitability metric has been taken a little bit lower. The company has raised that dividend and says it now intends to buy back more than 1 billion euros worth of shares in the second quarter. This on the back of its earnings rising. It made 2.32 billion euros in net profit for the fourth quarter, up from 1.07 billion same time a year ago. Revenue grew 11% rather to 12.14 billion euros. And the company is talking about stronger increase in revenue. It's corporate and institutional banking business. Those are the two arms, as well as higher revenue from commercial, personal and services division, along with investment and protection services. So quite a number of different parts of the business seemingly performing well. Charlotte spoke to the CFO, Lars Machenal, about the results and his expectations for the coming quarter.
It's a great quarter, yeah. Strategies that we put in place are delivering, and it's a good pivotal moment to turn into 25. And so basically the foundations have been laid for 2025 and beyond. So if we look at it, revenue's up 11% to over 12 billion. We have positive jaws that come with it, and so basically good cost control, like 1 billion of cost reduced. And all of that, the net income up 15%, up to 2.3 billion euros. On top of that, our common equity T1 went up. It went up 20 basis points to 12.9%. And we are committed to the shareholders. So we have committed a 60% payout ratio over the year 25. We're going to continue this into 26. And on top of that, we're going to introduce a new interim payment in September. So in September, we're going to pay 50% cash over the earnings. And so that's basically all fine. And look at our earnings per share in 24, up 8%. And basically that's our target going forward with all that we put in motion. So that's a bit the story of how the bank is really delivering and firing on all cylinders.
Great. So let's dive into the different divisions. Again, CIB, global banking doing well. Equities and FIC also very strong there. Equities up 30%. We know you've been building that business quite aggressively over the past few years. Given that it's bearing fruit, obviously we can see it in these numbers. Are you thinking of maybe continuing to make some acquisition, specifically to continue beefing up that part of the business?
Yeah, so the overall CIB, which basically consists of three divisions, being global banking, security services, and global markets, they're all doing very well. So they're up in total 20%, firing on all three of them. And as you mentioned, we basically have been able to complete the setup in the last couple of years. Yeah, so we've been building, adding on, but since like now a couple of years, we have the full set. So that basically means we have all services to offer to the client. We are well positioned in capital, as we just mentioned. So we are able to grow our market share, and this in very interesting products, high margin products, and that is what we will continue to do. So we're basically ready to continue on all cylinders.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.